Hi, this is Satya Garmela, and today we'll discuss a great trading opportunity that repeats very often on our charts. You should never miss this opportunity. You should always spot it when you observe it, and it's a very highly reliable pattern. So, this pattern is called three push pattern. Okay, let's look at this chart. For example, here you can see the market always makes three pushes in any direction and then it reverses into the opposite direction. For example, let's look at here. Okay, from here, push, first bear push, then another bear push, then another bear push. See, this is how you count. Okay, sometimes it can be slightly more, it can be slightly less, but broadly it will be three pushes. See, look, another bull here. One, two, three. Again, bull from here. One, two, three. Then here bear. One, two, three. Again bull. One, two, three. So this is very typical. This is how the market behaves. It always makes three pushes in one direction and then reverses into the opposite direction. This three push move reverses because it can end with two possibilities. The reversal is because of two possibilities. The first possibility is it is ending at the extreme of a trading range. Look, for example, here there is a trading range. Okay, here let's look at this three push. Bear move. One, two, three. Again, one, two, three. Where is it ending? At the bottom of the trading range. So this three push is ending at the bottom of the trading range. Now let's look at the another example of a bull move here within the same trading range. One, two, three. Or it can be one here, two, three. So it is also ending at the top of the trading range. So one reason why the three push ends is that it is ending at the top or bottom of the trading range and then it is reversing because it has hit the extreme of the trading range. This is one possibility. Now let us look at another possibility. Here there is a big bull run. There is a big bull move. Okay, in this big bull move, there is a small bear three push. This is a bear three push. So, this bear three push is nothing but pullback in a bigger trend, and the bigger trend is in the opposite direction. So, when a big trend is happening in one direction, a three push is a pullback in the opposite direction. So, that pullback has to end after some time, and then the original trend has to restart. That's why it is a causing a reversal. So now we had looked at two possibilities why three push will cause reversals. The first one is it has hit the extreme of a trading range. Now the other possibility is that we are already in a trend and this three push is actually a pullback inside the trend. But whether it is a trading range or whether it is a pullback inside a trend move, then three push is always ending in a reversal. Now let's look at other point. Okay, when the three push ends in extreme climax, the reversal is equally fast. For example, look at this three push here. One, two, three. Okay, and here it is very big climax. Why did I say this is big climax? Because you see, this is so far from EMA and this shoot was very big. The third push was extremely big. So this is a climax. This move ended in a very big climactic move. Because this is a climax, the reversal beginning of the is also very powerful. Is equally steep. It is like V shape from here to here, from here to here. It's a V shape. So if your three push is ending in a climax, the reversal that is caused by that is also extremely steep. So this is a case of a bear three push that ended in a climax, reverse steeply into bull. Whether later the bull move is steep or not is a secondary matter, but the initial bull move will be very, very steep. And now let's look at another example. Here also the three push, bear three push ended in an extreme climax. It's a big climax. Look at this. This one three push here, and this itself is the last part of that first push is itself is a climax. The second push here ended. This also is a big climax. Then you look at this. This is also another climax. Again, this climactic move is equally fast in the opposite side or afterwards. But later on, how long it goes is a different thing, but the initial part will be like V shaped. And on the contrary, if the three push is not playing the extreme climax and it is not climactic, then the reversal does not carry a strong initial momentum. Let us look at this example. Here you have a bear 3 push. Here you have 1, 2, 3. This is not very climactic. It's very near to EMA. It did not really go far. It is very near to EMA. Same way, you look at the next bull move. This is also not very enthusiastic. This is very slow, less momentum. One, two, three. So the point I want to say is, since there was no major climax here, the bull reversal or the reversal in the opposite direction is equally less momentum, has less momentum. Now, let's look at another point. Look at this. Sometimes what happens is, if your 3 push, we had seen in the earlier charts also, your 3 push can be extending into the 4th push, 5th push, or several pushes, and this becomes a channel. This is not just 3 push now. One, you have so many things to count. Okay, it's practically become a channel. If this 3 push has become a channel on the time frame that you're watching, then on a higher time frame, it's a 3 push. This is the same chart. Okay, we started looking at 10:45 and closed at 12. And here also, you look at 10:45. This is a 1 minute chart. This is a 5 minute chart. This in 1 minute chart, it looks like much bigger than a 3 push. We think it is 4 push, 5 push. It keeps on going. Actually, it's a channel. And then here you see this is a clear cut 3 push. One, 2 at 10:45, and then it closed at around 12 o'clock. Okay. Later on, I extended this chart on 5 minutes to show that the reversal is also a 3 push. One, two, and then three. So we should have an eye for 3 pushes. We have to watch 3 pushes every direction. Now again, if the 3 push on a higher time frame is not obvious 3 but less than 3 push, for example, look at this is a 5 minute chart. This is not 3 push, one, only two. There are only 2 pushes. If it is less than 3 push, then you should look at a lower time frame. Then that would be either a 3 push or a bigger one, 4 push or a channel. So here you see the same thing is 1, 2, and then 3. So this is a clear cut 3 push or even extended channel. This can be considered. So in a higher time frame, if you are not finding 3 pushes, then on a lower time frame, you are having either a 3 push or an extended 3 push. So you have to keep multiple time frames on your charts, on your tabs, so that you will be able to spot the 3 push, and you should train your eyes to spot the 3 push on different time frames. And now we have completed the basics of 3 push. In our next video, we will identify those 3 pushes where the profit is the most. So subscribe to this channel and keep watching. Thank you.